I get the excitement over some of the things the administration is doing, and I'm supportive of some of it. I don't think, let me say this. I think the problem is too far. I think we're too far gone. If we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically, or else the thing collapses. We had a big print in 2008. We had a bigger print in 2020. There will be another big print.
Renowned sound money advocate and portfolio manager Lawrence Lepard has been predicting a major global financial crisis for years. According to Lepard, we are on the very last leg of the fiat monetary system. The system is crumbling from the inside out, almost completely devastated by reckless spending and borrowing. In response to the coming crisis, Lepard believes central banks are about to unleash a torrent of money printing on the global economy, much more than we witnessed during previous crises, including the Great Financial Crisis and the pandemic. He further breaks down the situation in his recent book, The Big Print: What Happened to America and How Sound Money Will Fix It. In this work, Lepard examines the detrimental effects of fiat currency and inflation on the U.S. economy, emphasizing the need for a return to sound monetary principles. He argues that the current monetary system, characterized by excessive money printing and debt accumulation, has led to significant economic challenges, including inflation and wealth inequality. He believes that adopting sound money practices, such as those embodied by gold and Bitcoin, can restore financial stability and prosperity. In a recent interview with Natalie Brunell, Lepard acknowledges some of the efforts of the Donald Trump administration to address the government's spending, but stresses that bigger interventions, much bigger than any politician will be willing to take on, are needed to address these issues adequately. Seeing no possibility of that happening soon, Lepard again stresses that turning on the money printers is the only way out. However, due to decades of reckless spending and borrowing, the big print, so appropriately titled, will have to dwarf every other previous Federal Reserve interventions, including the trillions spent during the Great Financial Crisis. We will bring you clips from Lepard's insightful discussion with Natalie. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support, and enjoy the video.
I try to avoid politics of all stripes, okay, because I don't want to offend anyone in Camp Red or Camp Blue. I tend to lean a little more towards red, particularly with respect to Bitcoin. But having said all of that, I think what's going on here is, and I'm very supportive of Doge. The government's got a lot of fat in it. I think what Elon and Vivek originally were trying to do, to a degree, it's a worthwhile thing. However, let's be practical about what can be done. If you look at the federal government, they spent $6.75 trillion in last fiscal year. 80% of that is Social Security, Medicare, interest, and defense. So 20%, 1.3 trillion is all they could go after, and they can't cut it all, obviously. And, the deficit run rate right now is about 2.4 trillion. So, unless you want to reform the entitlements or end all the wars and take defense and the defense footprint back a lot, or you want to get interest rates down lower, which they may have to do. They may have to go to yield curve control to bring interest rates down. I don't see how you balance the budget. I mean, so while I get the excitement over some of the things the administration is doing, and I'm supportive of some of it, I don't think, let me say this. I think the problem is too far. I think we're too far gone. I really do. And so the book describes all the various paths, and none of us know with certainty what's going to happen. But, the general conclusion of the book, the reason I titled it The Big Print, is we're in a system that's constructed so that you have to print money to keep the debt burden from collapsing. This is Lynn's "Nothing Stops This Train" meme. And, we had a big print in 2008. We had a bigger print in 2020. There will be another big print. And so, in my opinion, as I said in the book, I feel like I want to stand on a soapbox and scream at the world. We're in a sovereign debt crisis, folks. You've got to protect yourselves from the oncoming inflation because there's going to be more of it.
Can't we keep this going on and have many more prints?
Yes, possibly. But two things about that. One, yes, but they will be inflationary. So you want to be in things that can protect you from inflation because there will be more prints, and they may hold the whole system together. I mean, to be totally honest and fair, I thought it was all over in 08. And of course, they've kicked it at 16 years from 08. So it could be 16 years from now. But I think you can see the trend and where it's going. I think one of the things that's notable is that the prints are getting closer, somewhat closer together and larger and faster in magnitude. Bernanke printed 3 trillion in 2.5, 3 years. Powell printed 5 trillion in 18 months. Money supply went up 40% in 2 years. I mean, so you're a working person. You've worked your entire life. You've tried to do the right thing and save your money. And they come along and they devalue all of your years of work by 40% in 2 years.
Mm-hmm.
I mean, it's tragic. And so the math, as you see, anyone who plays around with compound functions knows that eventually when you compound something enough, it starts to go vertical.
Mm-hmm.
And that's what's kind of going on with the U.S. interest expense right now, if you look at the chart of the U.S. interest expense. So it kind of feels to me like we're getting to the point where it is definitely going to break. There's another thing in the book that I think is very helpful. There's a chart by Hirschhorn Capital where he shows last 100 years, 11 instances of countries that have gotten to 130% debt to GDP. In every single case, they had a currency event, either very high inflation, hyperinflation, or collapse.
Yeah.
And so we're at about 125% GDP. So it kind of feels imminent to me. Now, by imminent, I would say I think this whole thing gets resolved by 2030. So 6 years isn't imminent, but it's, I invest with a 1 to 5 year time frame. So it feels to me like it's coming soon.
Lepard recommends hard assets like Bitcoin and gold because he believes the current monetary system is fundamentally broken due to excessive money printing, government debt accumulation, and fiat currency devaluation. Gold has historically been a reliable form of money because of its scarcity, durability, and universal acceptance. Unlike fiat currency, gold cannot be created out of thin air, which makes it resistant to inflation and government manipulation. Lepard sees gold as a hedge against economic instability, arguing that during times of crisis, investors tend to flock to gold as a safe haven. It has maintained its value for thousands of years, making it a trusted asset in preserving wealth through economic downturns and currency collapses. Bitcoin, according to Lepard, represents an even more revolutionary form of sound money. It combines the scarcity and resistance to inflation that gold offers, but adds portability, divisibility, and a decentralized nature that removes the need for trust in governments or central banks. Bitcoin's fixed supply of 21 million coins ensures that it cannot be inflated away like fiat money. Its decentralized network prevents any single entity from controlling it, which Lepard sees as an essential feature in a world where governments routinely manipulate financial systems for their own benefit. He argues that as more people lose trust in traditional finance, Bitcoin will become an increasingly important asset for wealth preservation. Let's get back to the interview.
In my opinion, we are in a sovereign debt crisis. We are at the cusp of the gradually turning into suddenly phase. And the two best data points to support that are that the U.S. Treasury bond used to be the base layer of the financial system for years. It was a safe place to put money. It wasn't going to get debased and you earned a yield, okay? Since 2020, in Treasury bond terms, gold is up 200%, Bitcoin is up 2,000%. That, to me, those are canaries sitting there keeling over in the coal mine that, like, we got a problem here. We got a serious problem. And so, but yes, I mean, I found it interesting that Besant got in there and he said, oh, all the gold is definitely there. He had to have been read in on that. There's no guarantee. He doesn't know if that gold is there, and neither do we. Ron Paul told me he's pretty sure it's not. I don't know what Ron Paul knows, but, it hasn't been audited since 1953. So and now Trump says he wants to go down there and check it out. I don't know. I mean, and by the way, I mean, it points out the difficulty with gold versus Bitcoin. And don't get me wrong, I'm a gold guy. I've always been a gold guy, still support gold, but you can't verify it, right? You don't have a blockchain. You can't see it. Mm-hmm. China says they've got 2,000 tons. I think they've got 20,000 tons. Yeah. Right? It's very hard to figure out where the gold is.
So do you think that we're going to go back to ZIRP, zero interest rate policy?
Yeah, well, I think they may have to. I mean, it comes down to how this unfolds and if something breaks. I mean, I think one pattern we have seen is that the Federal Reserve has two mandates, but really a third unspoken. The two Fed mandates, as in the 78 Act that they passed, are, manage towards full employment and price stability. And of course, they've come to define price stability as 2%, which is a lie. But for the sake of argument, that's what they're supposed to be doing. The third mandate that they've talked about a lot and acted on, but it's not written in the law, is what I call functioning financial markets. Mm-hmm. And so, and the math would suggest that you cannot grow GDP at 8% a year, grow debt at 8% a year and grow GDP at 4% a year without eventually that widened gap creating discomfort and a break in the financial markets. That's Hirschhorn's point of 130% debt to GDP. And so when that occurs, everything's off the table. I mean, there was a Powell pivot in 2019. I mean, Powell tried, when Powell first got into office, he actually tried to tighten. He wanted to go back to a smaller balance sheet. And, the bond market threw up on it and said, no way. And he had to pivot, right? And then COVID came along and there was a crisis there and they pivoted again. And in 08, they pivoted. I mean, if we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer. And they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically or else the thing collapses.
Lepard warns that we are entering a period of monetary crisis where the value of fiat currencies will decline at an accelerating rate. In such an environment, he sees hard assets like gold and Bitcoin as essential tools for protecting one's financial future. While gold has stood the test of time, Bitcoin offers a modern, digital alternative that can thrive in the age of rapid technological advancement. By holding these assets, investors can shield themselves from the risks of currency debasement and the eventual collapse of the current financial system. As the global financial system faces increasing instability, the importance of securing one's wealth in sound money has never been greater. Lawrence Lepard's insights highlight the urgency of preparing for the inevitable consequences of reckless monetary policies. While central banks may attempt to delay the inevitable with yet another round of aggressive money printing, history has shown that such measures only lead to further economic distortions, rising inflation, and declining purchasing power. Gold and Bitcoin stand as the last bastions of true financial security, one rooted in centuries of proven resilience, and the other offering a decentralized, technologically advanced alternative for the digital age. The choice is clear. Those who take action now by diversifying into hard assets will be better positioned to navigate the turbulent economic future ahead. Do you think Bitcoin or gold is the better hedge against the coming crisis? We'd love to hear your thoughts. If you found this discussion valuable, make sure to like this video, subscribe to the channel, and turn on post notifications so you never miss an update. Thanks for watching, and we'll see you in the next video.